Today, we're diving into a critical topic for building your business, market sizing. Now, I know that market sizing might feel like just another step in your business plan, something to check off for investors. But I want to share why it's so much more than that. Having a clear understanding of your market isn't just a formality. It's essential to shaping your growth strategy and ensuring long-term success. In this video, I'll walk you through 3 key steps to truly understand your market potential, from calculating your market size to refining a growth strategy and setting realistic goals for market penetration. First, let's go ahead and define some key terms to make sure we're all on the same page. The Serviceable Obtainable Market, or SOM, is the market size of your target customer. It's a subset of your total market that you believe you can capture the most market share in. Next is your Serviceable Available Market, or SAM, which includes your target customer plus the most closely related, either horizontal or vertical, customer bases you can reasonably expect to capture. Finally, your total available market represents the total market value of any customer base that might use your product or service. It's the maximum possible value if every single customer in your market bought your product. To best understand your market potential, I recommend using a market sizing approach. This method uses your company's unit economics to estimate the market opportunity, making it ideal for startups that have already achieved product market fit. For example, let's say you're developing a B2C mental wellness platform called ExecWell, specifically designed for women in executive leadership roles within the United States. Assume that ExecWell has found product market fit with C-suite executives, VPs, and senior directors at Fortune 1000 companies. These women are your target market, and for sake of example, let's say you charge $200 a month for access to your platform. Let's also say you do some research and there are approximately 50,000 women in these positions across Fortune 1000 companies in the United States. To calculate your serviceable obtainable market, you're going to want to multiply the price of your product by the number of potential customers. In this case, your SOM calculation would be the $200 per month you plan to charge for access to your platform times 12 months out of the year times the 50,000 potential customers you've identified in those positions you're planning to target. This would lead you to $120 million annually for your serviceable obtainable market. Therefore, your SOM would be approximately $120 million. This represents the market size you can realistically target within the executive women's leadership segment. It reflects the immediate opportunity available to your company based on your existing product and customer base. When estimating your SAM and TAM, you want to think critically about your expansion plans. Once you've reached a certain level of market penetration in your SOM, it will be time for you to start targeting your SAM and TAM. For example, does it make more sense to expand vertically by offering additional services such as nutrition, coaching alongside mental health services? Or would you want to expand horizontally with ExecWell into a new customer segment like executive men? In this scenario, let's say you decide to expand vertically into other wellness services that complement your existing mental health platform. You might want to introduce nutrition coaching, fitness coaching, and executive coaching as new offerings. Each of these vertical expansions represents an opportunity to increase revenue by providing more value to your existing customer base. With this, you can now calculate your serviceable available market. For sake of example, let's say that you've already determined the willingness to pay of executive women for nutrition coaching to be $150 per month, for fitness coaching to be $100 per month, and for executive coaching to be $200 per month. Then you can determine that nutrition coaching has a potential value across your 50,000 potential customers over 12 months at $90 million. You can also determine that for fitness coaching at $100 per month over 12 months for your 50,000 potential customers, the value is $60 million. And finally, For your executive coaching, across the 50,000 potential customers times the $200 a month they're willing to pay over 12 months, it's $120 million. Now, in order to sum all of these up to calculate your SAM, you will take the $120 million that you know they're willing to pay for your SOM or your mental health services, plus the $90 million that you know is your potential market for nutrition coaching, the $60 million that you know is your potential market for fitness coaching, and the $120 million that you know is your market for executive coaching to get a total SAM of $390 million annually within the United States. This vertical expansion strategy will allow you to deepen your engagement with your existing customer base by offering a more comprehensive suite of services that address multiple aspects of wellness needs. As a result, you can significantly increase your potential revenue and market share without the added risk of entering an entirely new customer segment. Finally, you're going to want to consider your total available market, which in this example, let's say, encompasses all executive women globally who might benefit from these services. Let's say that through research, you determine there's roughly 5 times the US market opportunity globally for your executive women. Citing this research, you would estimate your TAM to be 390 million times 5, or $1.95 billion annually. This $1.9 billion TAM represents the maximum potential market size if you successfully expand your platform globally across all relevant wellness services. Now, let's talk about some strategic considerations. As you build up your bottoms-up market size for expanded vertical markets, you're going to want to prioritize which services you'll introduce next and for what strategic reasons. In this continued example for ExecWell, let's say you focus on launching executive coaching first due to its high value potential and alignment with mental health services already valued in your existing clients. In an alternative example, maybe you would choose to roll out nutrition coaching as it offers faster adoption rates or faces less competition in the wellness space. Some of these choices are going to be guided by your customer discovery and other factors. It's also crucial to consider what your pricing strategy will be when estimating the expanded market size. Will your existing customers have the same willingness to pay for these additional services? Chances are the answer is no. So, for your executive coaching, it might command a higher price point than the fitness coaching, but could also have a much longer sales cycle. So, understanding these dynamics are going to help you to accurately project revenue potential and prioritize which product or milestone you're going to want to roll out at which given time. It's important to accurately project your revenue potential for each potential service as you plan to expand and prioritize your expansion efforts accordingly. Lastly, let's talk about market penetration. What I often see with early stage founders is a tendency to overlook market penetration, leading to overly optimistic financial projections. While optimism is certainly important, let's look into how projecting your revenue can be matched with what you've estimated as your market size to be realistic in what you imply you're going to capture to potential investors, and also just as you make a realistic business plan for yourself. In this particular example, we're projecting that ExecWell is planning to capture $44 million over the next 5 years. However, if you remember, we projected our obtainable market size to be $120 million, which implies you're going to capture nearly 40% of your obtainable market. This is an extremely unrealistic scenario. There will always be competition, and market penetration is almost always more challenging than expected. As a benchmark, I typically advise founders to aim for less than 5% market penetration of their serviceable obtainable market over the first 5 years, and less than 1% of the TAM over the entire 5 years of their first projection. Market sizing is not just about the numbers. It's a blueprint for how your business will grow. By understanding the terms, calculating your market size, and planning realistic growth strategies, you can lay a strong foundation for scaling your wellness business. I hope this breakdown helps you approach market sizing with confidence. If you found this useful, please consider sharing our course so we can help build wellness communities.